into a new normal and how to adjust to it and exploit it for your own advantage. Then we're going to go on to the best deals on stocks that we see right now. And then finally, for the main entree, we're going to go on to one specific stock that I believe is screaming buy right now. This is a stock that's been discounted about 70% from all-time highs, has bounced off for years levels that it's currently at. I'm going to make my case for this stock and let you be the judge. As always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence for all ideas presented. Also, quick plug, we are officially starting our $100 off Black Friday sale on the Discord. Get $100 off annual membership when using that first link down below. As a member, you'll get access to all of our ideas and alerts, our stock briefings, our daily morning briefings, our price targets, our model portfolios, our urgent news and Catalyst AI bots, and our 10+ hour video lesson library. Anyways, we'd love to have you on the team. Make sure to join with that first link down below. Okay, let's get to work. Okay, so markets are increasingly down in the dumps. The November choppiness has become more and more of a trend, and fear is climbing. But this is a good thing. Choppiness and sell-offs tend to scare many folks out of markets and create the biggest upside opportunities upon reversal. I understand that there's a lot of folks that come into the market and are only interested in the market during the shining periods where the sun's out and everything's great, and when the rain starts, they're the first to run back home to mama and papa. But they don't realize this is all routine. Now, why exactly are we dealing with choppy McChoppy right now? A few reasons. There's more doubt on the December rate cut. There's data fog, which means investors and the Fed are driving blind because of the government shutdown. You have a lot of data that just isn't coming out. And then you have valuations that have climbed without breathing. You need to see regular breathing or people freak out. And then we skipped the typical early fall sell-off that has happened for like the last 80 years. Usually in September, you have a down month. This year, we skipped that, and October was also strong. We had an Uptober.
All right. $7.5 billion. Oil holding. Futures up. ZOM, CVX, PAR, Dino up. And no guidance at all. Cautious positive guidance. Okay. Should be good. Permian Basin and Gulf of Mexico drilling. Okay. No idea if that's recent or what, but we can ask. Offshore Gulf of Mexico leasing. Okay. I think that's a made-up quote. Earnings beat, revenues mixed expectations. Okay, we're just gonna start talking now and get this over with here. Trump's energy stocks will help you retire. This is not financial advice, but my research suggests it's a good idea to look at ExxonMobil before the end of November, ticker symbol XOM. A lot of energy, oil and gas CEOs were unsurprisingly positive as far as guidance goes when Trump got elected. Interestingly, a lot of solar stocks did incredibly well this year as well, because they're here to fill the gap for data center buildouts until we get nuclear down the road. Right now, the market looks choppy. Might go sideways for a month. I'm not here to make up predictions for the market as a whole, but a really safe stock is ExxonMobil, ticker symbol XOM. Earnings were a beat, revenue missed, but the stock looks to be holding up, and $7.5 billion in revenue is still within expectations. Guidance is cautiously optimistic, and there really isn't a lot of safe havens, not counting cash, for money in stocks right now. So that's the idea. Let's jump into a little breakdown.
This is Sam Putnam.
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 Okay, so this is what you're looking at in terms of earnings. So you can see that the earnings beat, the reaction was muted, big rebound recently, and building out kind of a mini flag if you're a short-term investor. Otherwise, you can just say, look, this broke out of a big base. It's over this 115 and change chop, and really seems to be one of the only sectors that seems to be, I say that cautiously, holding up. We'll see what happens. Crude oil is down a little bit over the past week, but no big down days like the market as a whole has had. Of course, the market as a whole, meaning largely NVIDIA, AMD, Palantir, the big tech companies. AMD actually looks fine, but the Palantir earnings sell-off was pretty rough. So it's just hard to find any sort of easier opportunities like existed in September. I mean, quantum was crazy. Nuclear was a crazy run. Uranium with that as well. And now we're on the backside of all these moves. So you have to be really careful looking for opportunities when we keep having Trump and Xi meetings that result in big sell-offs, even when the meetings are good. November 30th in South Korea was thought to be a positive resolution to tariffs, but market said nope. So energy looks solid. If we look at little energy stocks, Dino holding up, actually gapping up right now. PAR gapping up as well. And the big ones, Chevron, chopping around but holding. In my opinion, slightly better looks ExxonMobil, because you can risk off of yesterday and the day before. And the day before. Yesterday being the last business day, so Friday. risk $1, make 10, 20. It's not like you need to look at your phone every day, but it'd be good to check in once every couple of days, maybe once a week at the least, because the stock does move 2% a day. So worst case scenario, you have a 500,000 portfolio, you put 10% in this stock, and that means you're down $1,000 a day, worst case scenario. Each day the stock goes down the amount that it normally can move. So looking at your portfolio every few days starts to sound like a good idea. So that's the ticker. In terms of what these guys are up to, I know typically you would talk about what a company is up to before you talk about whether it's worth buying, but given this current environment, just looking at where money is actually flowing, which you can see on the chart, is a lot more honest than checking on speculation as to whether they're going to discover new oil fields or increase production or decrease production, or spend more money on capital expenditures, which $8.5 billion spent in Q3, over $20 billion this year, but that's actually a little less than they were targeting. So it's a kind of sector where a lot of money gets spent, and it's the kind of stock that is basically a safe haven in times of uncertainty. And if we look around the big ETFs, the indexes even, QQQ looks fine, but only because we had that huge bounce on Friday. So Tesla had a big bounce, which was basically the consumer leader. If Tesla had rolled over here, it would have basically signaled that the euphoria or the energy is sucked out of the market, and your average investor is not interested in buying the dip, which more and more the average investor is creating these sort of patterns. It might sound hard to believe, but that's what growth in Robinhood suggests. So Tesla definitely one that doesn't move with the market as much as stocks like Nvidia, because it's such a sort of cult stock, but that bounce will be really positive for the entire market. So XOM is the ticker. If you like these ideas, hit that like button for the YouTube algorithm. If you want a free course on how to buy stocks before they go up, put that together. You can get access to that when you subscribe. And if you want to have someone look over your portfolio for a very reasonable $25, head over to stockscommunity.com. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So people right now are like, okay, well, are we overdue for a fall sell-off? And you're seeing some of those people start taking profits and de-risking a bit. However, I think the biggest reason of these four is really the doubt on the December rate cut. Now, you got to remember, Fed rate cuts have a massive, massive impact on the value of stocks. The interest rate has a direct impact on the multiple that people are willing to pay on sales. A lot of people think, oh, this company, it's doing so much better because it's going up. But a lot of the times, even if the sales numbers are just going up 20 to 30% a year, year, the stock can go up 5 to 6x in that year if the interest rates are getting cut massively. However, when rate cuts start slowing down or when markets think they're going to slow down, that means that the future value of these companies get crunched. They get absolutely destroyed. That's why if you were around back in 2022, well, you saw massive rate hikes crunch, absolutely crunch so many stocks that were excellent companies, but they were crunched 50% down or more simply because multiples were crunching. People are like, hey, if interest rates are going to be hiked at levels we've never seen before.
Okay. Raise guidance. Data center revenue doubled year over year. This one stock can change early buyers' lives. This is not financial advice, but my research suggests it could be a good idea to buy as much as possible before November 26th. The company is Micron, ticker symbol MU. It's a memory company, and their revenue from data centers more than doubled this year. So Sam Altman wants 20 gigawatts of power. Compute is basically what that means. And in order to build out what is going to be the biggest build out of data centers ever by a mile, you need massive amounts of memory. This is literally the memory you have in your computer that you have in a flash drive on a massive scale. So symbol is Micron MU. Similar companies are Western Digital and SanDisk. So the same consumer companies you get in Best Buy. Let's take a look at the chart and let's look into how their earnings went and why this company has gone up a lot and still seems like it can go up a lot more.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Okay, so 9 billion plus, up from 8 billion in Q2, and up from a little under 7 billion year over year last Q3. This is the chart right here. And this thing just keeps marching up. And you might say, okay, well, isn't it not a good idea to buy stocks after they go up? And that would be true, except for the fact that look at the other stocks in this sector. I mean, SanDisk just had 8 green days in a row. Western Digital, pretty similar type move. So Mu, after just having a little pullback here, really solid Friday bounce with the market. And right now gapping up in futures, which opened at 6 p.m. today. So it's over this level around 250, really important psychological whole dollar, whole $50 level. A lot of people see that. And sure, you could say it's 100% up from the 200-day moving average. So over the last 200 days, if you average the price and compare that price to the price that it's at right now, you'd get a price that's half of where it's at right now, which is crazy to say for a $200+ stock, but that's been the appetite for data center build out right now. It doesn't appear to be slowing down. So you either got to hop on board or stick your head in the sand, because there's, besides oil, besides healthcare actually looks okay. The XLV ETF. But you do have to deal with just how slow this moves. 1% a day, first off. And then the biotech ETFs, which move a little faster, XBI and LABU, they look great. They're setting up great. But it's not really a high conviction, move to put money into this biotech ETF. This is a leveraged biotech ETF, which is the only reason it moves 6% a day, which is enough to be interesting. But you're also getting the risk of individual names, which, unless you know exactly what's going on with trial data, you could get caught in this Unicure drop, which dropped about 100% is a little extreme, but looks like 60 to 70% for sure. When the FDA told them that they needed a control group, even though they'd previously said they don't. And then this CRISPR company, same situation. Well, not really. I mean, one of the patients got serious side effect. So it kind of just feels like a habit to jump into a biotech ETF, even though you're not exposed to any of those individual companies. It's not really clear that there's really the most opportunity there. So I have to think that the best individual stock idea is not an ETF, not a biotech ETF, but Micron. So if you feel like this is up quite a lot and you're not sure about it, that could be worth checking in, comparing to semis as a whole. So if you look at semis as a whole, look at the top 5. I mean, NVIDIA has bounced a couple times. It has earnings in a few days, though, so that's kind of off the table. AMD had solid earnings enough. I mean, the reaction was fine. Big move after this OpenAI deal. But it's very, very market dependent. And then these smaller companies, the only one that really looks super compelling is Tower Semiconductor, TSEM, which had a very recent earnings result. So you can look. I've looked, and I'm telling you, the one that I found is Micron. So this is the spot. This is the level. That's the caveat on how far it's up, but also why memory is doing so well. And it seems like they raised their guidance. So there's going to be more and more data center build out. They haven't received any sort of, slowdown. So they raised their forecasts, and that's according to Reuters. Even as SanDisk pulls back, Micron seems to be where people are rotating into. So that's the idea. If you like these ideas, hit that like button for the YouTube algorithm. If you want a free course on stocks, hit that subscribe. I release that once a month in the YouTube post section. And if you want to join a community of other people on the same journey as you, trying to get help with their stocks without giving a percentage to a financial advisor, hit that link in the description. Stockscommunity.com. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Before, that means we have to discount these companies at levels that never made sense before. Right now, we're in a completely different era than we were back in 2022. The slowdown of rate cuts and the new higher for longer talk is causing a lot of people to capitulate, but unlike in 2022, the overall trend is nonetheless that we're going to see more and more rate cuts and more overall easing. A lack of a December rate cut means little long term. Fed fund futures are projecting that sure, December might not be a lock-in for a rate cut, but the next few meetings in early 2025 are going to be, and by the end of 2025, you're expected to go down substantially. So markets that are selling right now and cooling down because of these fears, well, sure, there's reason to do that algorithmically speaking, but at the end of the day, this is going to end up being an arbitrage opportunity. Now look, in my last video, I gave my prediction for 2026, and that prediction was that you're going to see a beautiful overall uptrend that ends the year higher, but way more frequent, severe, sharp pullbacks. And this is going to be a new normal that you're going to see and you're going to have to deal with and you're going to have to plan for. It's also going
Okay. So even if this aerospace company loses all their airplane customers, they're still going to be all right. This one stock can change early buyers' lives. This isn't financial advice, but could be a good idea based on the info I've looked into to buy as much as possible before November 30th. Ticker is HXL, and they do carbon fiber composite materials for aircraft. Specifically, they do have 30% of sales now coming from space and defense. So, in essence, government contracts make up about a third of their sales, which is good because aircraft as a segment can be a little cyclical, seasonal. Of course, there are crazy times like COVID where that was really a problem for those companies. But once again, cruisers cruised, planes flew. But during that time, it's really helpful to have government contracts. So this is a ticker as the market's a little choppy that looks to be holding up well. And let's jump into a little breakdown on what it's up to.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here's the actual price agreement where buyers and sellers are meeting, aka the price. It's at 68 bucks right now. And it had a big move up on earnings. The earnings per share actually came in a little bit below consensus. Revenue was a little better. So all we really have to care about though is because, earnings per share can be great and then companies can sell off. We saw what Microsoft did this quarter. Significant beat on earnings per share and significant sell the news. Even with that OpenAI agreement that they figured out for the equity and the basically free pass for OpenAI to have another partner for compute. Despite all that good news, Microsoft sold off. So it's not really super helpful becoming an earnings expert, even though it seems like it's a good idea to do that. So HXL, big move up, earnings reaction, which we can see in hindsight is solid. And it's okay that's in hindsight because it came down, it's holding on this moving average, and it's going sideways here. So again, a little opportunity where a stock made a big move and is now going sideways, basically telling us that buyers and sellers agree it's worth this much. And at some point, they're going to decide that buyers want it more or sellers want it more. And right now, it looks like buyers are going to win. Part of that is just by it sort of getting more and more compressed each day, moving up slightly as it gets more and more compressed, but also it just made a big move up and had some profit taking. So the fact that it didn't go straight down is good. Now, that's like the story, the tale of what you actually see with your own eyes. But if you want the story of the narrative version of the story, they do carbon fiber for airplanes. And like I said, growth in defense and space, space being led by SpaceX, I guess almost a decade ago. And then that space really growing since then. Revenue is almost 500 million, but basically flat year over year. And I don't know if this sector as a whole is something you want to take a look at right now. I mean, aerospace and defense. If we look at some of these other tickers, KTOS being one that comes to mind immediately, big sell-off on earnings. So these speculation moves that had big moves in aerospace and defense are definitely cooling off. So this is not really a bet on aerospace and defense. It's more a earnings play opportunity. So this is the end of Q3 earnings season. NVIDIA is very near the end, coming up in about a week. And until then, there's going to be a few opportunities like this where companies had good earnings reaction. There's a little pull back, partly due to the cool off of the market as a whole. And anything can happen in December. But given the run we've had since April, I think it would be crazy to go all in on December. It's probably more likely that there's a little bit more sideways and chop. So that's why instead of, again, I've been talking about ETFs that are doing really well. It's great that, the bank ETF was doing pretty solid. Nice bounce today. It's great that healthcare is doing well, and these biotech ETFs, as always, are intriguing, although they definitely have some drops. If we don't know the market's going to do well in December, we kind of have to look at individual names because the money has to go somewhere. It's not like everyone just sells everything and goes into cash. Basically, every person who has a 401k or any type of passive index account is passively, by doing nothing, betting on AI because those companies make up like 30% of the market. So I think that bet is pretty much played out for this year. It's probably not going to do much in the next month. And people that do move around to different stocks could do well looking at recent earnings plays like Excel. So that's the idea. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want one-on-one help, head over to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Going to be a gold mine for people that know how to strategize and actually benefit from volatility instead of be destroyed by it. Sadly, in every bull market, you see a lot of people come in and they're really only interested in getting instant returns without any kind of volatility, without any kind of research, without any kind of understanding of what they're buying. Well, all those things sound great, but you're living in unicorn land. That's just not how things work. And the faster that you can understand this, the more you can understand that these big dips and these sell-offs are actually features of markets. They're not drawbacks, they're features. They're things that you can exploit to your advantage. Let everybody else that just wants to buy and not think about what they're buying lose their money. It's up to the people that actually want to do the work and actually want to understand the bigger picture that are going to do well in the long term. Okay, with that being said, now it's
Okay. Tiva. Oh, so they have a GLP drug. Okay. That's interesting. In August. So, yeah, started to move there. Okay. Generics. Okay. This stock will surprise everyone. This is not financial advice, but I think it's an okay idea to say it could be good to buy $50 of this before November 30th. The company is ticker symbol Teva, Teva. They are a generic drug producer They recently came out with a GLP-1 drug, which is the Ozempic semaglutide sort of get thinner without doing anything movement. And the stock went on a tear since August when they mentioned that. So could cut into Novo Nordisk's sales in that segment. This is their 9th consecutive quarter with higher revenue growth than the previous quarter, which is pretty incredible. $4.5 billion in revenue this quarter alone. Let's jump into the chart. Let's jump into why it could be a good idea to invest in a generic drug company right now and why there's less risk than in investing in an early stage biotech. It's not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here's Teva. They're in Israel. They don't actually have a big institutional ownership, but because it's a drug manufacturer, as opposed to an early stage biotech company, it seems lower risk to me. I could be wrong, but I think the fact that they have, I'm pretty confident actually, the fact that they sell 4 billion of generic drugs a quarter indicates that even if one of their trials or one of their sister companies or companies under their umbrella has a little bit of a misstep, has an FDA snafu, I don't think the stock is going to move down significantly. So that's a big sort of sigh of relief for these sort of healthcare companies. Here's the 9 consecutive quarters of revenue growth a year. This is from their website, tevapharma.com, investor relations. And generics is growing in the US, Europe, and international markets. So this is kind of what I'm talking about. Here's a new drug they have that's phase 3 ready. So a smaller company would say that, and that could be their only drug. And if I were to say it could be a good idea to buy that stock, you have to really be careful because that drug could fail and a company could start trading for less than the cash that it even holds. But because this is a $4.5 billion a quarter company, I think it's a different story. So here's a little bit more about what they're up to. One of their branded products, $600 million in sales in Q3 alone, which is up 40% year over year. They are looking into some phase 2 Crohn's disease drugs, treatments. And they also have some early stage drugs. So this one's looking for FDA fast track. But basically they sell generic drugs. So they have the first generic GLP-1 for weight loss. So if that sounds exciting to you, you're not alone. It's basically like a massive software as a service type opportunity, because you imagine you take this thing, you pay once, you lose weight, and you have fewer cravings. It's hard to think that someone's going to not want to pay for it again. So that's why investors are so excited about GLP-1s in the past 2 years. And here's the chart. I mean, the chart looks exciting even if you knew nothing about what this company was up to. Of course, the chart is actually often the leading indicator for why to focus on one of these companies in the first place. I mean, that's the process. I don't think it's surprising. You scan through thousands of stocks. And then you can look at the individual day moves. But in general, you look at the full day moves. especially look around earnings times. And on a weekly chart even, you can see how this starts to look interesting. So made it over this high from 2024 for the first time this year. It's holding up on earnings. And this level has a lot of volume. Earnings day, of course, when the info gets disseminated and all the funds buy it if they like the earnings. And now that it's above that level, you can use that level to say if it starts to drift below there, it means those same funds don't want to own it anymore. Which means you certainly don't want to own it. If it does hold that level, well, there's probably interest. So very important to respect that 24 and change, 24 and a half. So you're really risking 50 cents a dollar to make 10.20. So that's the idea. That's TIVA. That's the chart. I'm not sure you really have to worry about all of these risks. Of course, there are a lot of risks with a massive company like this. They did have this recall for this blood pressure medication due to an impurity. All these companies are going to have class action lawsuits. This is a $35 million settlement that they improperly listed patents. That's the allegation. And TIVA is going to say, well, that's not the case. And, well, I don't know how this makes any sense, but they must have put up patents that they didn't actually own in an attempt to be the only generic provider for this asthma inhaler that this lawsuit is about. But the part that's not in the weeds is 35 million doesn't really matter for a company that's 4.5 billion. That's the reality. So that's the idea. TIVA. If you like these ideas, hit that like. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want help, head over to stockscommunity.com, and I'll see you in the Discord tomorrow morning. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Time to get into the 4 best deals that we see right now. Let's start with Chipotle CMG. Now, as you know, Chipotle, or as I like to say, Chipotle, is a popular restaurant chain with more than 3,500 locations focused on premium, customizable burritos, bowls, and salads. It's one of the rare restaurant brands with pricing power, digital dominance on delivery apps. It ranks first in most delivery apps, and 0 franchise exposure, meaning tighter quality and higher margins and a pretty good name brand. Now, Chipotle operates a vertically controlled restaurant model with strong digital ordering, new drive-through pickup lanes called Chipotle lanes, and an expanding international footprint. Their digital loyalty ecosystem is one of the largest in the industry. Now, I'm a big fan personally. I order their burrito bowls at least once a week, but I usually don't talk about their stock. However, right now, because
Okay. Caterpillar. $17 billion, up 10% year over year. 40 billion of backlog. Power generation equipment sales. Okay. there is one stock that is about to skyrocket. This company had 17 billion in revenue previous quarter, up 10% year over year. 40 billion almost of backlog is a new record for them. This is due to data center build-outs. I'm not going to hold you hostage here. The company is Caterpillar, ticker symbol CAT. A lot of us know Caterpillar is the truck company, right? The dump truck company. They also make power generation equipment, and that's been the source of their massive growth. All these data centers require massive amounts of power, and Caterpillar is helping fulfill that need. So let's jump into the chart and a little bit about that growth driver.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So this is a little bit of a bummer. $500 million hit from tariffs, but in the context of that $40 billion backlog, that doesn't seem to be that big a deal. And you can see that in the chart itself. If we look at the chart for Caterpillar, it's been on a huge run, but recently the earnings were super solid, and these sell-offs for such a big company, you can see it only moves a few percent a day, are really just the market selling off. So right after Trump and Xi talked in South Korea, little sell-off, market sold off. And then when the government reopened, another sell-off, which we don't really know exactly why. There was profit taking or selling, and the government opened, sell the news, but maybe the data that's going to come out that we haven't gotten for the last few weeks on jobs and other economic indicators, I don't know, CPI, PPI, I think that data might have already been available, some of it, but there's definitely some that we didn't have, and people are probably, could be a little worried that that isn't such great data. So a little caution there with that sell-off. But despite all that, Caterpillar is still holding up. And we can take a look at some big companies, NVIDIA, as a comparison. Very similar move up about 2 weeks ago. And since then, selling off twice. So you have to think that the company that isn't selling off as much is stronger. And that's the idea here. So that's the chart for Caterpillar. Energy and transportation, strong growth. Power generation is up 30%. And of course, construction demand for data centers is huge. And whether or not all that compute ends up getting used, all the infrastructure to power it is still required. So for that reason, Caterpillar's been doing well. This is a risk. This is very much topic of the day. Norway's sovereign wealth fund took Caterpillar out of their portfolio because of the potential connection to Israeli operations. So could that happen? I mean, we can look at the institutional ownership is 70% for Caterpillar. So it definitely matters if there's some type of movement that basically young people are totally Palestinian sided, and the people, I think, who make the decisions for endowments and for funds and all that probably are not going to divest any individual company from a connection to Israel. So that's a risk, but I don't know if that's something to worry about this quarter. The more important thing is just, is this data center run going to continue? Because if we look at some of these companies, Bitfarms, which is transitioning from Bitcoin mining to data center compute, selling off. Maybe the stock that's the biggest that we all know is Oracle. And if Oracle can't really bounce here after a massive sell-off, it could really start to get concerning that maybe the air is getting sucked out of this data center euphoria that we experienced for the last 6 months. And maybe we'll have a little bit of a chill out period for a couple months, which means for all these companies that support data centers, they're also going to go sideways at best. So I don't think that's going to be the case. Oracle may or may not bounce. I think it's more likely to bounce for sure. And I think Caterpillar is more likely than not to move up from here. But in any case, there's a really clear level here that's established around 550. What do you know? Another very obvious psychological level that a lot of people are going to be looking at, thinking about. So if it goes under that, you can sell out. It's no big deal. The best people at this, and some people don't really accept this to be the case, but the best short to medium term investors, I'm not really talking about traders, I'm talking about holding a stock for a week, for at least a few days, maybe up to a few months or a year, are wrong about 70% of the time, sometimes a little more than that. And the way that works, again, is if you buy it right here on June 20th, right? Sure, maybe you get stopped out, you lose 1%. But if you hold it, you don't get stopped out, and you trail it with a moving average, meaning if the stock stays above this red line, which is just an average of the price over the last handful of days, then you risked 1% on your position and you made 60%. So that's the idea. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want one-on-one help, you'll see some awesome testimonials. Head over to stockscommunity.com. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Okay.
Because their stock is trading at such a discount. In my opinion, it's an unbelievable deal. And despite this dip, Chipotle continues delivering double-digit same-store sales, expanding margins, and 150 to 200 new stores per year are opening, even more for 2025. This pullback is giving long-term investors a rare opportunity, and I'd argue it's very quality growth at a discount, a massive discount. Chipotle rarely goes.
All right, let's talk about Apple here. Okay. There is one stock that is about to skyrocket. This company recorded $100 billion in revenue last quarter, up about 10% almost year over year. We all know, and many of us like the company Apple, ticker symbol AAPL. The main question for Apple is they're shifting away from ChatGPT. When you ask Siri a question, it then goes and transcribes your question to ask OpenAI, ChatGPT. So that gets sent to OpenAI's servers. Apple is moving into a collaboration, a big time collaboration with Google. So they previously would list Google when you open Safari, they would default to Google, and that would cost Google something like, I don't know, 10 billion or more a year, somewhere in that ballpark. And I guess that collaboration worked well for everyone, so they're probably going to implement Gemini right into like on device, or at the very least they're going to use Apple servers, so you can ask questions like you would to Siri to ChatGPT, but they would go to Gemini instead. So OpenAI getting cut out a little bit, Google, the behemoth, getting that benefit. Let's jump into Apple, the products, updates on which products are doing well. I mean, iPhone's always doing well, but more importantly, they're at all-time highs right now. They just consolidated briefly. So why is it a good time to buy right now? I think the chart, which is the price agreement, we can use our eyes to actually see what in reality is happening supply and demand wise. And we can also talk about the narrative, which is fun, but it can be a little bit too much information sometimes. It's not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here is Apple. This is the earnings reaction. So sold off a little bit and holding, but not doing sensationally. I mean, it's pretty much where it was 2 full weeks ago, which is fine. It means there's agreement at that price. This is the all-time highs breakout. It had kind of a fake breakout, and then when China's president, I'm just going to call him the president, that's close enough, said that China isn't going to export rare earths, and China produces 95% of the rare earths. He didn't actually say that. What he said was that they would check every rare earth company before they allowed it to export. But anyway, that miscommunication with Trump and the US cost the stock market like $1 trillion in lost value, or whatever exactly it is. And that had a big hit in Apple as well. So it actually didn't break out to all-time highs. But since then, big run up. And even as the market as a whole has chopped back a little bit, we can see how much it's chopped back. Almost back to that day when the rare earth miscommunication happened. Apple, though, way higher than that day and holding above that. So that's the tail of the chart, and it's pretty pretty. So there's the earnings per share beat right there. And as far as what they're up to, well, that's pretty interesting too. They plan to run Gemini models on their own cloud. So this is pretty interesting. Because what that means is that Apple, who famously didn't hack into the phone of the, I don't know where it is in California, but I think it was a shooter situation or something like that. They have all the data, but they still have the reputation, whether completely true or not, of being a very private handler of your data. So by integrating with Gemini in a way where they can actually get access to Gemini on their own servers, it means they can use all of the data they have on everyone, but also not give it up and maintain that brand that they have. So it does sound pretty appealing. Totally different than how ChatGPT is currently working. I mean, it's great to have Siri working with ChatGPT. It's great to have a Siri that works. It's been a long time coming. But this Gemini deal is a nice bridge solution. I mean, we'll see if they end up with their own model that's better. It's hard to really bet on them having their own model that's better than Gemini. I mean, if they have Anthropics, they have Gemini, Meta AI, they probably wouldn't send questions to Meta AI. That might be too competitive for them. I mean, they were the ones who basically ruined the Facebook mobile app for months, if not longer. Caused probably $100 billion loss in Meta stock by shutting off Facebook's ability to track users to different websites and identify them. So I think this Google deal is a big deal, and it could last longer than what they seem to be letting on. So that's kind of the lore of Apple and why this is a really important time for them to sort of have a reputation of being not lost in the AI race. So it's a big deal. I mean, Meta spent, I don't know, $1 billion on individual people. So Apple starting to make it sound like they're in the same conversation. That's the stock, that's the price level. And if you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I post that in the YouTube post once a month. And if you want one-on-one help, head over to stockscommunity.com. You can try it out for $25 for 7 days. And you can give a look at testimonials there. There's also a review of someone who's taken that course. So yeah, hope you find something for you. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam